The Bureau of Labor Statistics released new data to show job growth was revised down for the year prior to March 2025. The revisions show a drop of 911,000 jobs from initial estimates. Let's bring in CBS News MoneyWatch correspondent Kelly O'Grady. Kelly, thank you for joining us today. What does this data tell us about the labor market, and does it signal anything to the Fed at this point?
So a couple of things. One, that 911,000 number, these job revisions are not out of the ordinary, but it is quite significant. And I want to emphasize that this period where those revisions are said to have taken place, it's April 2024 through March of 2025. So roughly 10 months under the previous administration and the rest under the current administration. And what this tells us businesses, the Fed, is that weakening in the labor market that we have been talking about a lot of late, especially after that jobs report on Friday that came out, is that this weakening has been happening for longer than we realized. And if you break down the 12 months and you look at these revisions, it actually tells you the U.S. economy added on average just about 76,000 jobs a month. That is much lower than was originally expected. Some of those months when we reported on them going back to almost a year ago, you were looking at over 100,000 jobs added. Yeah. So two things I want to underscore. One, this does tell the Fed, okay, interest rate cut, yes, let's do that. We do have a lot of investors saying that this would argue you need a 0.5 point rate cut, not just a 1/4 point. But to sort of temper some of those expectations, I want to highlight that this has already happened. This is a backward-looking report. So yes, the economy added less jobs than we originally thought, to the tune of almost 1 million jobs. However, that's already baked in. We didn't go into a recession. So I think when we see this big number, I just want people to realize this is something we've already been living through. This is the current economy, and this is a backward-looking report that just provides some context.
Yeah, and very important context to provide there. And so I want to ask you now about tariffs, because Treasury Secretary Scott Bessent, he basically says that U.S. would have to issue refunds if the Supreme Court rules against Trump's imposed tariffs. So what could be the impact of that on the Treasury and also the U.S. economy? Because we've heard the president boast about how much the country is getting from these tariffs.
So one, just a logistical nightmare to begin with, right? Because all of these businesses for the past few months have been paying these tariffs when they have brought imported goods under those tariffs into the country. So that's one thing, though I'm sure no business would say no to a refund. But when you think about what this would mean for the Treasury, right, yeah, you'd say, okay, yeah, I'll take some of that money back. But for the Treasury specifically, they have been taking in this money, and it has been messaged as this is a good thing from a national debt perspective. If you're going to be raking in billions of dollars from tariffs, it can offset some of that concern about a rising national debt. And when you think about the U.S. economy, it actually could impact it, and it could impact even you and me. Because when you have debt that is rising and you have businesses and analysts and investors looking at a U.S. economy that has a rising debt, national debt, it becomes less secure, less stable, because the idea is, well, are they going to be able to pay their debts? The U.S. has always been able to pay its debts, but in that scenario, you have to give a higher interest rate for investors to buy your debt, to take on that risk, if you will. Now, why does that matter? Because those long-term interest rates, they impact things like mortgage rates, car loans. So yes, I know as consumers, we hear, it's a national debt, it actually does have an impact ultimately. And so that's sort of a concern here when it comes to this tariff refund.
Yeah, very important thing there to keep in mind. Kelly O'Grady, as always, thank you for helping us break things down. Appreciate your time today.